Let me now bring on board Mr. Mark Mobius, Head of Emerging Market Group, Templeton. Mark, what a delight to have you back on ET Now. Thank you for joining us. Mark, first a reaction to the S&P downgrade. How do you think global financial markets will react to S&P's downgrade of 9 EU nations?
I think it's been pretty much signaled already, so the surprise factor is pretty much out of the way. Most people in the financial world have expected this sort of thing. You must also remember that the credibility of the rating agencies has been really hit as a result of the misses that they had so far in various crises. So I don't think this will be a big event, frankly.
Mark, what about EFSF and them retaining the AAA rating? Because that really is the bigger question mark. You think cash buffers as well as higher collateral could help retain that rating for EFSF?
Well, you must remember that there are many institutions in the world who are not allowed to buy certain securities if their ratings go below a certain level. But given the fact that there are still A ratings in these sovereign bonds, that shouldn't trigger sales by these big institutions. It's only when it goes below investment grade that they are forced to sell.
Mark, it's quite ironical, but if I take the clock back, U.S. equity markets, U.S. bond markets and dollar as a currency hit the bottom the minute S&P downgraded their bond rating on US from AAA to AA. Do you think European markets, after the S&P downgrade now, they have hit a near-term bottom?
Well, I think in the case of the European markets, I believe now people are looking forward, investors are looking forward beyond where we are now. In other words, there is a growing realization that Europe will recover, Europe will be able to move forward and make the adjustments and the reforms that they have to make. As you know, I've been saying that for quite some time now, that I believe the Europeans will be able to rise to the occasion and come out of this crisis. So I think there's a growing realization of that happening, which is why you're seeing recently you've seen the euro getting stronger, ratings in terms of the CDS numbers looking better. They've been able to raise more debt and so forth and so on.
So, Mark, just to stretch that point forward, you think it is unlikely that Germany will slip into a recession this calendar year?
I believe it's quite unlikely, and I think it's unlikely for the rest of the European Union generally to slip. Now, some countries like Greece will have problems, but generally speaking, the European Union, I think, you're going to see recovery in the economies there going forward.
Mark, the U.S. economic data of late has been quite encouraging, starting from the retail sales to the consumer data, and now the latest one being the housing data. Do you think U.S. economy has bottomed out?
Yes, I believe that for the time being at least, it has bottomed out, and you're going to see better numbers coming forward. There is, of course, many problems, debt problems and so forth, but at least for the short term, I think things look pretty good.
Mark, Indian markets were down by about 25% for the year gone by, and they were down 42% in dollar terms for the year gone by. Do you think this year, which is 2012, the bear market in India will come to an end?
I think that will be true for most of the emerging markets, including India. And part of that is because with the recovery in the U.S., U.S. investors will feel less and less risk adverse, and they will be willing to return to emerging markets. Unfortunately, as you know, emerging markets are considered risky, but in fact they are the opposite. They are looking very good in terms of their foreign reserves, debt, and so forth.
Mark, how much recovery do you see in Indian equities this calendar year?
It's impossible to say exactly, what the recovery will be, but I think we're going to see a better year this year.
Mark, a lot of global traders and global money managers are now re-engaging in risky assets. Do you think the current risk-off trade is worth the risk?
Well, it depends on what you consider risky. A lot of investors around the world consider emerging markets risky and even frontier markets risky, but the reality is that they are not. They have a lot of very, very good fundamentals. And therefore, I think the definition of risk is changing because you can see that in the credit default swap numbers. Many European countries are considered more risky than the emerging markets.
Mark, I just read a Goldman Sachs report, and Goldman Sachs is of the view that the best of the BRIC economy is now behind us. Since you head the emerging market group, which largely is about investing in some of these BRIC nations, do you think the best of the BRICS is now behind us?
No, definitely not. You can see that in the economic numbers for India, for China, and for other countries. The growth numbers are looking very, very good, despite all the bad news and all of the negative news that you're getting globally from Europe and other parts of the investment world. But the reality is that things are looking very, very good in these BRIC markets, and we're really just beginning the takeoff stages.
So, Mark, would you be a buyer into Indian equities at the current point?
Of course, yes. We are buyers, and we continue to hold quite a lot of Indian stocks.
What sectors are you liking at the current juncture in terms of the valuations that they're giving right now?
Well, there hasn't been much change. I mean, we're still holding consumer stocks and buying consumer stocks as well as commodity stocks. So those are the two areas where we're focusing. But it really depends on the individual company and the valuations. But generally speaking, that's where we are.
From a global perspective, at Templeton, are you underweight on India or are you neutral on India?
If you compare us to the index, we're neutral. We're probably about where the index is. But frankly, we don't pay much attention to the index. We make our decision based on what we see in terms of valuations of each particular company.
So give us a sense, Mark, at what is the kind of number you are ready to commit to Indian equities in absolute terms or in dollar terms this year?
That I can't give you because it depends on the amounts coming in to our funds. At the current time, it's pretty static. I mean, we're beginning to see net numbers coming in, but in terms of actual numbers, I can't tell you how much will go into the Indian market from our funds.
So have you got any fresh inflows in any of your India dedicated or emerging market funds in this year?
Yes, we do have inflows, but they're relatively small at this stage of the game.
Mark, you mentioned that you're bullish on Indian commodity stocks. What makes you bullish on Indian commodity stocks? Because Indian commodity stocks, A, they are under-leveraged, B, they are completely dependent on global economic cycle.
Well, because we're generally bullish on commodities globally. We think that over the long term there will be a continuing demand for commodities. There will be lots of fluctuations in price, of course, but there will be a continuing demand.
But Mark, for the year ahead, do you think commodities will consolidate rather than have that one perpendicular move, which we have been seeing last year as well?
Of course, many of these commodities moved up considerably, and there is naturally going to be correction when you have that kind of move. But as I said, there will be lots of fluctuations around the general long-term upward trend in commodities.
Mark, if I look at a declared portfolio, at Templeton you also have a very large exposure to banks and both the categories of banks, private as well as PSU. Given the way how banking stocks of late have managed to underperform, are you looking at increasing your exposure to Indian banking stocks?
Well, the banks, for us, are a way to get exposure to the growth of the economy. And that's true not only of India, but of all the other emerging market countries. generally speaking, these banks, with the exception of the Eastern Europeans, have not been impacted by what's happening in Western Europe.
Mark,
they don't have the exposure in Western Europe. So, in that sense, we want to continue to have these banks.
So, Mark, let me ask you a hypothetical question. Somebody approaches you with a fresh investment of $10 million and is completely, sector or country agnostic. So, how would you invest that $10 million for the year 2012, where you expect maximum return generation could happen?
Well, of course, emerging markets is the place to be. So, I would say the greater portion has got to go into emerging markets. But then, within emerging markets, I would say 30 or 40% should go into frontier markets.
Mark, as an asset class, what do you think will give bigger returns in 2012? Would it be equities or commodities?
Equities, I believe, because the equities are looking very good globally. We've got very high returns in dividends, and if we see a move up in prices, then things will look very good.
Mark, the 2011 fiscal deficit number for Indian economy was 4.6%. Now it appears that it will be about 5.5 to 6%. So as a portfolio investor, are you a bit worried that Indian government is finding it extremely difficult to manage their fisc?
It's very, very difficult for the government because they want to have reform, but they're running into all kinds of political flack, as you know. Nevertheless, the mere fact that they are interested in moving forward with these reforms is a very, very good sign. And I believe even if they get 10 or 20% of the changes that they would like to institute, that'll be a giant step forward.
Mark, there are two stocks which you've been holding on from last 5 years. One is Tesla and the other one is HDFC Bank. Can I read in between lines and assume that these are two of your favorite stocks when it comes to Indian equities?
No, I can't comment on that. It's impossible for me to say, yes, we have those stocks, but I can't comment on whether we would buy more or even sell. I just can't comment at this stage.